Good afternoon, ladies and gentlemen. The time is 2 o'clock, and I can do nothing but laugh because I just got stopped out of my position 15 minutes ago. And as of now, that position is trading 12 points cheaper than where I exited it. And honestly, I'm happy with this exit. That's the thing. There is not much that I can say here. It wasn't a day where I would have been able to hold on to the position. It's just that's not a viable thought process to think that there is a world in which I would have held that position. So very like tricky Wednesday. Despite what you would have done, I think it would have been difficult if you didn't get the best of entries. If you entered right in the morning, for you to have made any kind of money today, shorting neutral options. So yeah, anyway, the exit that I took was on the 17400 put and 17600. Purchased this back for around 51.52. Purchased this back for around the same price. And yeah, this is my exit here. And as of now, from my exit, this has given up about 10 points. So 10 to 12 points. And yeah, it's been exactly 15 minutes. So first of all, today was not a great entry for me, not a great trading day altogether. I will go over why. I think this should more or less be self-explanatory as to why. I mean, if you look at how the market has played out today, and against that, we've had very low premiums. So we've been seeing a crush in India VIX. We had a crush in India VIX here, a crush in India VIX at the gap up. Then we had a crush by the close. Then we had another crush in India VIX. So now India VIX is actually almost heading to 20 and probably going to break 20. The S&P 500 VIX is around 18. So that way, right at the open lately, there is a complete demolishing of premiums, which is why I've not been trading. Like Friday, why did I not trade? Monday, Tuesday, all these days I'm not trading because there's too much of a fall off in premium overnight, making it not very attractive to trade intraday. But today being a Wednesday, the idea is, look, Wednesday has a high probability of going in my favor because these options are expiring the next day, and potentially it can work out. But it specifically in this situation didn't work out. I'll go over why. So let me just show you what my opening trade was. I mean, you can do nothing but laugh when you get out at the worst possible point. But my idea was to get out with 50k loss. I got out with 50k loss. I'm happy with that. Like really speaking, there's not much else that I could have done there. It would have been stupid for me to hold the position. So anyway, today we had a gap up. We had a tremendous gap up. SGX yesterday was indicating almost 17,650 at one point of time. And so it was obvious it's going to be a gap up. And after the gap up, we had two things happen. One, put side premium absolutely demolished. Like everyone who's holding long put options, now that we're gapping up once again, is dumping them. Put side lost all their value. But since the spot actually gapped up, even the futures opened below 17,500, people who were short the 17,500 and above calls, they didn't feel the need to cover. So it's not like there was a big call side IV spike in the morning. So it's not like calls had gained much at all. In fact, in some cases, OTM calls not gained anything despite this gap up. And puts have lost tremendous amount of value. You're talking 60-70% of their value. Despite all this, my idea is, okay, look, today is a Wednesday, right? Being a Wednesday, there is still always opportunity. And that's probably why my trade also got salvaged. I managed to hold my trade till where I did. And also exit at the relatively minor loss is what I would think. And all of that was only possible because it's a Wednesday. If today was any other day, I would have booked a bigger loss today. So that kind of worked out in a way. But my entry trade was, okay, let me short now 17,200 should be a very strong support. Let me short 17,200 put option and the 17,650 call option. My idea is, okay, I'm shorting about 15 rupees, 30 rupees. And this should more or less, not require much adjustment, not require much balancing. But right into the open, we saw this massive red candle. I didn't adjust much for delta here. I just moved down my call by one strike. So I moved down, that to not all my quantity, just part of my quantity, 60% of my quantity. I moved it down to 17,600. Now there is about, this went up to 18 and there was 23.5 rupees in my call option. But it's still quite far away, still not too much to be worried. And here one more thing was there. The future in the morning, the future which is expiring tomorrow, was trading at a 45-point premium to the Nifty, which means that Nifty was trading at 17,400. The future was trading at 17,445. So there was this big discrepancy, and whenever there's a discrepancy, large discrepancy, so close to the expiry between the future and spot, you can expect that there will be some volatile moves here and there. Anyway, I did this, and once I did this, we started heading higher and higher. And just as we were about to breach this particular swing and head to the day's high, I restructured my position a little bit. What I did was I moved my puts up aggressively, 100 points to 17,300 with about 28 rupees of credit in it. And these calls also, I moved down my rest of my calls to 17,600, which had about 24 rupees. Now 28 rupees call and 28 rupees put and 24 rupees call. You think that if market goes up, then the position should benefit. But that wasn't the case, simply because now the future was starting to overtake 17,500, and that led to this huge call side explosion. So if you see what happened to this call option here, my idea was to take risk off on the call around 31, but I didn't get the reaction time. Really, there was no reaction time. It absolutely blew up. And in order to deal with that, see, one good thing here is, being a Wednesday today into this up move, put options didn't give up any value. Now, what does that mean? I can move up my put without much cost, because technically, even when the market was, all this happened in this candle, this particular candle, this 1035 candle. In this up move, put options didn't give up any value, and calls gained a lot. And today is a Wednesday. So if I move up my put, eventually once either the call gives up or the put gives up, I will come back into a profit, which is why, and because today is a Wednesday only in that situation, I moved my put up to 17,400, and I'm like, okay, what is the worst case? I'll take a 15-point stop loss, because I don't want to exit into this massive IV spike on a Wednesday. Now, had these puts given up some value, I might have then taken risk off on my calls. But because the puts didn't give up value, I was that time at 17,300 put. These were at 23, they remained at 23. These were around 41, 42, they went down to 40. Versus this call that had suddenly gained about 7-8 points. So I moved up my put here, and the idea is that I'm just going to trail from there. And this was my worst mark to market. I never saw this mark to market again. From there, just trailed it for the rest of the day. Was all good. It even came back into the green. After it came back into the green, because the calls, whatever crazy IV spike was there, as we then made a lower low, that completely got negated, and the puts didn't gain and started to make sense. Now here, my mark to market almost went into about 50,000 positive. And in fact, when I was punching the exit button, I had a limit order to buy these puts at around 42. And the rate at which the puts jumped, now this is the second half. So just as this candle was forming and we were going to break this low, I punched my order to exit, and my stop loss got jumped because the puts expanded almost like 15-20 points in a matter of no time. It was instantaneous. Let me just show you. Right, so here you see 1 second they're at 36, and all of this happened probably in the span of 1 minute. At the end of this candle, jumped my stop loss, went all the way up till freaking 65. I exited at 51, 52, that price band, but it went all the way till 65 and then only came back down. And you can see here, this entire saga didn't last very long. So from 36 to 65 to back to 36 again, all in the span of 20 minutes. Right? So 20 minutes, this entire scenario has played out. So there was nothing that I could do here. I had to get stopped out. Imagine if I didn't get stopped out here and got stopped out here, it would have been much, much, much worse. So you kind of have to just understand that today the market made some initially these calls blowing up from something like 21 rupees, which is what they're trading at now, almost to 45 rupees at one point. And then these puts, which went down as low as 30 rupees into the up move, then bouncing back to 65 rupees. So both sides, it was like that. I mean, in case you did something like went long in the morning, and then once you considered this to be like a, you could have said, okay, there's some kind of top here, you went short here, maybe that would have made sense. Or once this low broke, if you took a short and very quickly booked it, then also it could have worked out. But if you were trying to do a neutral triangle today, unless you got a good entry, because my entry also was not great. After I entered, both my options gained at one point of time. It would have not worked out well. In fact, if you see, my entry was this position is 17,200, and this, it is trading for about 16 rupees now. That time it was okay. It has given up quite a bit from the initial thing. Yeah, so it has, okay, it's not given up that much. It's given up around 5 points, I guess. But anyway, it would have been difficult to hold on to this, because at one point this call would have gone tremendously up and there wouldn't have been any credit in it. Yeah, would have gone all the way to 30 rupees, just this call itself. Now it's come back to 11, but can't really do too much about that. So that being said, it was not a Wednesday for me to make money. Once again, it's just so that these days, people who've been short volatility making huge money overnight, people who had shorted April options or May options or December options, they would have made insane killing this entire time. They would have also had big trouble when we had that downward cascade to 15,600. They would have had big trouble. But after that, once IV started cooling off, anyone who shorted IV at around India VIX 25 levels, they would have made good money. So good for them. But regardless, once again, I'm happy to take this loss. Not much can be said about Wednesday. It's just that situation where everyone on the put side is taken stop losses. Call side, there's no fear to cover, because still that round number 17,500 is holding. As soon as we break that, puts have already lost so much value. How much further can they lose? They can't underprice risk by so much. So they can't compensate much, and calls have to blow up, because people who are short calls are then starting to cover them at those higher levels. So yeah, that's about it. Thank you so much for watching. And one more thing, Reliance is like completely crazy performance. I mean, Bajaj twins also today, but I'm more concerned about Reliance because I have a position on it. Massive up move. In fact, not even that far from an all-time high on Reliance. Uh, yeah, just another 100 points for all-time high on Reliance. My short calls are bleeding, but I'm actually very happy with this up move. It means that my shares have gained a considerable amount. And even if I do rollover, I'll get an excellent rollover on this call option. Even if this call option goes in the money also, I'm fine with it. I will manage it at a time when it makes sense to manage it. So that's about it. Thank you so much for watching. I hope you had a good trading day. I hope you didn't get caught in that stupid put spike. And like, it feels, I mean, in a way, someone will be like, don't you feel bad? You're in a profit, you hit exit, and then you exited at a loss with that ridiculous slippage. Yes, but one other way of looking at it is, if I didn't hit it there, then I would have hit it around 60 or maybe 65 at the top. And then I would feel even more like an idiot. So I'm glad I just got to exit where I did. Thank you so much for watching. Take care. Have a good one.